It is Monday, February 16th, 2026. And if you've taken even a quick glance at the markets this morning, you probably saw it. That massive green spike,
Yeah.
Rivian, ticker Rivian, it's currently trading at $17.73. That is a jump of what, over 26%
In a single day.
in a single session.
It's the kind of move that makes you spill your coffee.
Right. And usually a pop like that, you're thinking buyout rumor, some kind of crazy speculation. But this one feels different.
Well, I think it is different. It feels like the market is finally catching up to a story that's been building for, almost 2 years now.
Yeah.
For the longest time, Rivian was stuck in that,
Ah.
that promising but perilous category. Great product, but just bleeding cash.
Constantly bleeding cash.
Exactly.
Yeah.
But what we're seeing today, I think, is the market digesting a very specific narrative. The shift from a niche luxury brand to
Maybe.
a mass market player.
And that's exactly what we're going to unpack. We've got the latest earnings report from the 12th. We've got the 2026 guidance and some really interesting notes from the Motley Fool. But I want to look past just the stock price, because a 26% jump is exciting, but the stock is still under $20.
Context is everything. If you bought at the IPO back in 2021, you are still way, way down. So the real question isn't, is the stock up today?
Yeah.
The question is the business model finally working? Is this the turning point?
Okay, so let's start with the catalyst then, the thing that's driving all this excitement, the R2 fleet.
The R2, this is it. This is the make or break moment.
We've been hearing about it forever, it feels like, but the timeline is now real. Deliveries are scheduled to start in the second quarter of this year.
That's just a couple of months away. It's imminent.
And to really get why the market cares so much, you have to look at the positioning route.
Absolutely. Until now, Rivian's been selling the R1T and the R1S. Beautiful vehicles.
Incredible vehicles. I see them all over the city now. But they start at, what, $75,000?
Easily. And once you add a few options, you're pushing six figures. That is a very small market of buyers.
A very small pond.
The R2 is a total pivot. It starts at $45,000.
45. That brings them right into the Thunderdome.
It does. It puts them toe-to-toe with the Tesla Model Y, the Mustang Mach-E, a dozen other EV crossovers. It is a very crowded, very dangerous place to compete.
But that price point, how are they even doing that? Is it just a smaller car, or is there something more fundamental going on?
It is smaller, yes. But the real secret, and the sources really highlight this, is in the manufacturing.
Okay.
With the R1, Rivian was basically learning how to build cars on the fly. It was complex, it was expensive, very heavy. With the R2, they've completely overhauled the process. They're using larger die castings, which means fewer parts to weld. They've integrated the battery right into the car's structure.
So less complexity means lower cost.
Precisely. And that's the only way you can survive at a $45,000 price point. You just can't build a mass-market car using those old, luxury, hand-built techniques. You have to be absolutely ruthless with efficiency.
Okay, so the car is cheaper to build. Great. But is anyone actually going to buy it? I remember the hype back in 2024 when they first announced this thing. It was off the charts.
The sources mention it. In the first 24 hours after the announcement, they took 68,000 reservations.
68,000, wow. That is a lot of people raising their hands.
It is. But we have to be a little careful with that number, A reservation is usually just a small, fully refundable deposit.
It shows interest, not a guaranteed sale.
Exactly. It shows interest. And the EV market in 2026 is a very different beast than it was in 2024.
How so?
Well, the early adopter wave is kind of over. The people who bought an EV just because it was new and cool, they already have one. Now, Rivian has to convince the pragmatic buyer. The person who's worried about charging, who's worried about resale value, who's cross-shopping the R2 with a hybrid Toyota R4, that's a much, much tougher sell.
So the demand is there on paper, but turning those reservations into actual cars and driveways, that's the real test.
And doing it at scale, that's the other huge piece of this puzzle. You can have the best car in the world, but if you can't build enough of them, you just die.
Let's talk about those production numbers, because this ramp-up sounds aggressive.
Aggressive's the right word. In 2025, Rivian delivered 42,247 vehicles. That was their total for the entire year.
Okay, so just over 42K. Got it.
Now look at the guidance for 2026. They're projecting between 62,000 and 67,000 vehicles.
Whoa, that's nearly a 50% increase in a single year.
Almost entirely driven by launching the R2 in the second quarter. Think about the operational strain. You need 50% more tires, 50% more glass, 50% more microchips.
And if any one of those suppliers has a problem,
the whole guidance number falls apart. And we all know supply chains have been, let's say, temperamental for the last few years.
To say the least.
R.J. Scaringe, the CEO, he's been very open about this execution risk. He says they've learned from the past, but historically, this kind of scaling is where car companies trip and fall.
Okay, so they're trying to build more cars, cheaper cars, but let's talk about the elephant in the room, the money. Are they actually making any? Because for years, the whole story was that Rivian lost a fortune on every single truck they sold.
And that was true. But if you dig into the financials from the 2025 report, you can see the bleeding has slowed down dramatically.
Okay, hit me with the numbers.
So if we just look at the automotive segment, just the business of building and selling cars, in 2024, that part of the business lost $1.2 billion.
$1 billion, just gone.
Vaporized. But in 2025, that loss shrank to $432 million.
Okay, wait. That's a huge improvement. They cut their losses by almost 2/3.
It is a remarkable turnaround in efficiency. It shows their cost cutting is actually working. But, and this is a really important but, a $432 million loss is still a loss.
They're still losing money on the hardware.
They're still in the red on every car that rolls off the line.
So if you just look at the car business, they're selling dollars for, I don't know, 90 cents.
Essentially, yes.
Yeah.
And normally, that would be a massive red flag. A manufacturing company that loses money on manufacturing has a fundamental problem.
I feel a but coming.
There's a massive but. Because if you only look at that automotive loss, you are missing the single most startling number in the entire report.
This is where we talk about Volkswagen, isn't it?
This is exactly where we talk about Volkswagen.
I have to admit, when I first heard about this partnership, I figured it was just a standard investment. You know, here's a pile of cash, good luck.
A lot of people thought that.
But reading through the source material, it's way, way more integrated.
It is. This isn't just a loan, it's a joint venture. And it changes the fundamental definition of what Rivian actually is. Volkswagen didn't just give them money because they like their trucks. They gave them money because they desperately need Rivian's brain.
Okay, when you say brain, what are we actually talking about?
We're talking about their zonal network architecture and their software stack.
Okay, hold on. Zonal network architecture. That sounds incredibly impressive, but what does it mean for me, the person just driving the car?
Okay, think of a traditional car's wiring, like a giant bowl of spaghetti. You have one wire from a switch on the door that runs all the way to a central computer, another for the speaker, another for the window. It's heavy, it's complex, it's a nightmare to update.
Got it. A tangled mess.
Rivian's zonal architecture is more like a modern smart home. You have these local hubs or zones in the car that handle everything in that area. The lights, the windows, the sensors, and they all talk to the main computer over a simple high-speed data connection.
So it uses way less copper wire.
Way less copper, it's much lighter, and this is the crucial part. It is totally controlled by software.
And Volkswagen doesn't have this.
Volkswagen has struggled, famously, with software. Their ID series of EVs had huge delays because the software just wasn't ready. So instead of trying to reinvent the wheel, they decided to just rent Rivian's wheel.
So Rivian is basically a tech consultant now.
They're more than a consultant. They're a technology provider. And here is where the numbers just get wild. We just said the car side of the business lost $432 million, right? Well, in 2025, Rivian posted $576 million in software and services gross profit.
Wait, say that again? 576 million.
Yes.
So, if I'm doing the math right, the profit from their software completely wiped out the loss from building cars.
It did more than wipe it out.
Yeah.
Because of that software revenue, Rivian's overall gross profit for 2025 was a positive $144 million.
That's incredible. So they're essentially a profitable software company that just happens to be running an unprofitable car factory on the side.
That is a fascinating and probably very accurate way to frame it. And it raises this huge strategic question for investors. What are you actually buying here?
Right.
Are you buying a car manufacturer that's competing with Ford and GM? Or are you buying a tech platform that's licensing its operating system to the biggest auto giants in the world?
It's kind of like the Amazon model, isn't it? For years, their retail business barely broke even, but AWS, the cloud computing side, was a money-printing machine.
That is the bull case right there, that Rivian becomes the AWS of the auto industry. If they can sign up other manufacturers, not just VW, then the low margins on the R2 barely matter. The cars are just a proof of concept, a billboard for the tech.
But the market isn't pricing them like AWS yet. I mean, AWS is a trillion-dollar idea. Rivian's sitting at a $22 billion market cap today.
And that brings us back down to earth. The market is skeptical for a reason.
Right, because for all this amazing software margin talk, they still have to actually build 67,000 cars this year without messing it up.
Exactly. And let's not forget the volatility. The stock has a beta of 1.77.
And remind everyone what beta tells us.
Beta just measures how much a stock moves compared to the overall market. A beta of 1 means you move with the market. A beta of 1.77 means you are almost twice as volatile.
So if the S&P 500 sneezes...
Rivian catches a really bad flu.
Okay. So even with today's 26% jump, this thing could easily swing 10% down next week on just some random macro news.
It happens all the time. In fact, the sources point out that even with this massive jump today, the stock is still down more than 10% year-to-date as of mid-February. It's been a total roller coaster.
Yeah. There was one other detail in the sources that really stood out to me as a reality check. The Motley Fool snub.
Ah, yes. The stock advisor list.
So the Motley Fool has this flagship list, 10 best stocks to buy right now. They've got a pretty solid track record. And despite the R2 launch, despite the VW deal, despite this clear path to profitability, Rivian wasn't on the list.
It's a telling omission, isn't it?
So why do you think that is? If the story is so compelling, why aren't all the analysts jumping on board?
I think it comes down to risk-adjusted return. Yes, Rivian could double or triple if every single thing goes perfectly. But look at all the risks we just laid out. Execution risk on the R2 ramp, supply chain fragility, the chance that consumer demand for EVs softens even more.
So there are just safer bets out there.
Exactly. If you look at big tech or other established players, you might get solid growth with a fortress balance sheet. Rivian is still deep in the prove-it phase. They have a cash runway now, thanks to Volkswagen, but that runway isn't infinite. They are not self-sustaining yet.
They need the R2 to be a home run. They can't afford a flop.
A flop would be catastrophic. If the R2 launches with quality issues or if the margins aren't what they promised, that whole narrative of the tech giant just collapses.
And they go right back to being a cash-burning car maker.
Which is a terrifying place to be, especially if the economy turns down.
Okay, so let's try to bring this all together for everyone listening. We're looking at a company that is fundamentally changing right before our eyes.
We are. 2026 is the year where the rubber meets the road. Literally.
On one hand, you have the R2. It's affordable, it's mass market, it's designed for efficiency. This is the car that is supposed to get Rivian into every neighborhood in the country.
And then, on the other hand, you have this hidden software giant emerging through the VW partnership.
Yeah.
A part of the business that's generating $500 million in pure profit. And it's basically subsidizing the car factory.
It's such a unique position to be in. I really can't think of another car company that looks quite like this. I mean, Tesla has great software, sure, but they don't license it out to their direct competitors.
No, they don't. Rivian is carving out this really specific niche for itself, the neutral arms dealer of EV technology.
So here's the question I want to leave everyone with today. It's something you touched on earlier.
Go for it.
If you're looking at Rivian stock today, at $17.73, what are you actually valuing? Are you valuing a car company that is still struggling to break even on its hardware? Or are you valuing a nascent software monopoly that is just using cars to show off its code?
Because if it's the latter, then $22 billion might look incredibly cheap in 5 years.
But if it's the former, it might be very expensive.
And that is the gamble. That's the whole bet right there.
Yeah.
But one thing is for sure. The next 6 months with this R2 rollout will give us a much clearer answer.
We will definitely be watching closely. Thanks for breaking this all down.
Anytime. Always a pleasure.
And thank you for listening to The Deep Dive. We'll see you next time.